Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday, the 20th of September, 2022. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Just going to bring up the high risk investment warning. I'm going to keep this on screen for a few moments. Can I just get an indication that you guys can hear me? I'm using a new microphone. Just want to make sure that you guys can hear me. I am getting an audio feed. Okay, excellent. Thank you. All right, here's our market commentaries disclaimer. I'm going to keep this on screen for a few moments. The audio should be a little better. The microphones are a much better quality. So I hope I've set it up correctly. Here's our references: FXCM MarketScope 2, TradingView.com, and we'll start off with the Bloomberg, just the news items that we need to know for today. All right, so the first headline reads as follows: ECB path. The pace and magnitude of monetary tightening by the European Central Bank will depend on its capacity to keep a lid on inflation expectations and reduce the spread of price increases beyond energy, said Governing Council member Pablo Hernandez de Cos. The cutting of Russian gas flows to the continent will likely lead to a more prolonged and intense inflation bout that cannot be countered by a slowdown in activity only, said de Cos, who's considered one of the bank's most dovish officials. It's the first time he has spoken since this month's historic three-quarter point hike, which matched recent tough action by the Federal Reserve. Next headline reads, selling crude. The U.S. Department of Energy will offer an additional 10 million barrels of low sulfur crude from its strategic reserves ahead of its plans by the European Union to ban most Russian oil in December. The government's offer comes at a time when global benchmark oil prices have retreated to levels seen before Russia's invasion of Ukraine. The timing is also notable as it coincides with OPEC discussing the possibility of curbing production. OPEC and its allies agreed to cut output next month by 100,000 barrels a day. Ukrainian Foreign Minister, so this headline reads more weapons. Ukrainian Foreign Minister Dmytro Kuleba urged Western nations to supply more weapons so forces can press ahead with their counteroffensive against Russia. The plea came as Germany pledged to hand over 4 more self-propelled howitzers. Kuleba said Ukraine hoped to add to recent territorial gains. The counteroffensive is a clear message to everyone that it works, that it makes sense to help Ukraine with weapons because we can defeat President Putin and his army in our territory, Kuleba said. He also predicted that Putin will probably try to block the renewal of a grain export deal that expires in November. Next headline, buying gas. The German government has set aside billions of euros for natural gas purchases in an effort to stave off an energy crisis since Russia cut off its supplies. Initially, 1.5 billion euros had been set aside for gas buying. But with that funding nearly exhausted, the government has added another 2.5 billion euros, according to a document seen by Bloomberg. Altogether, credit lines of as much as 15 billion euros were set aside to fund the purchases. Germany's economy has been particularly hard hit by the economic standoff with the Kremlin because of its reliance on Russian gas and oil. A looming energy shortage has touched off a debate in the government over how to ensure supplies while softening the blow of surging prices on consumers and companies. Coming up, European shares are on track to follow Asian stocks higher after a late rebound on Wall Street. Sweden's central bank kicks off a big week for global tightening with what will probably be its most aggressive rate rise in almost 3 decades. General debate begins at the annual UN Generally in New York. Nobel laureate economist Joseph Stiglitz is among speakers at the Nordic Business Forum. German Economy Minister Robert Habeck speaks at the Congress of Municipal Energy Suppliers. Economic data includes German producer prices. Haleon and Kingfisher report earnings. All right, let's do some analysis. Okay, so on your screen, you can see the real rate. I think it's worth putting the dollar in here. Let's bring that in. Okay, I'll just make this logarithmic. And the real rates here, and we've said this for a fair amount of time now, moving in that northeasterly direction, have that positive correlation with the US dollar. We're going to have a very important FOMC announcement tomorrow. I think we'll get the 75 basis points. I don't think we'll get the 100. But I think the communication thereafter becomes important. What does the FOMC statement suggest? What is the press conference? What's the tone of that press conference? I think by and large, all of those are going to be key drivers of market direction. If there is an obvious and intense hawkish tone to it, I think that the real rates respond, and I think the US dollar responds. What is interesting on a technical basis is we are starting to get to levels that suggest real rates probably need to just have a bit of a breather. So you can see that back in May, they went overbought and there was a 3-week decline. And that corresponded with a dollar 3-week decline. We went overbought back in middle of June. It took, once we hit that overbought, it took another sort of 4 weeks, and then the real rates pulled back, and that's where the dollar followed suit. Okay, so we're kind of getting into this area where there is going to be an overbought condition, and then we're going to have to really see how it plays out. What kind of rhetoric? Sorry, I'm just going to go mute for a moment. I just need to clear my throat. I'm begging your pardon. We'll have to see what kind of rhetoric comes out with regards to an overbought real rate. In other words, what usually kind of corresponds or happens is that the media starts talking about pivots, overshoots, have we gone too far, moderation, and of course, if there is some sort of coinciding between, I think, media news and the overbought, I think it's something that we should take notice of. And the idea here is any sort of pullback in the real rates, any sort of pullbacks in the real rates probably have an effect on the greenback, but those would be compelling, right? Those would be compelling. Why would they be compelling? Because we're just going to go through to our model. We look at the primary trend. That's our arrows, okay? Primary trend is up. Primary trend is up. Okay, so we go back to the primary trend. Then we take a look at the zigs and the zags, the so-called heartbeat of the market. And what we want to do is see if the pullbacks will be, of course, compelling. And this is just something that I think is worth mentioning. I saw it when I opened up the charts today. We're getting to that period where a correction certainly becomes more probable. I don't think we're at that just yet, right? We've got to get through the FOMC. Okay, we've got to get through the FOMC, and if we get through that FOMC, I think we get the drive. I think the sort of that final part of that impulse that takes us into overbought territory, and then we want to see what happens then. I just want to interrupt with a comment here. I've got a few, excuse me, I've got a few emails just saying I haven't sent the link through for the day trading course. What I would do is just urge you to look in your spam folders. I've responded to all the requests. If you haven't received it, what tends to happen with Gmail for some odd reason, a lot of my emails go into spam. So just, you know, I think it kind of picks up Forex or what, and must be some sort of, so just check your spam folder, because if I reply again, it's just going to go back into spam. So you'll never see the reply. So just take a look there. All right, let's just go back to the analysis here. So you can see that you can just see the heartbeat, the ebbs and flows, and this is just something we need to keep an eye on. What's interesting is not only is there a movement in terms of the media stories that get released, analysts also start coming out more on the dovish side. So, for example, I remember being quite surprised. One of my most sort of favorite, my favorite, just trying to phrase this correctly, one of the best shows on Bloomberg, in my opinion, is something called Real Yield. It's on a Friday. The panel's terrific. And one of the questions asked by Jonathan Ferro when we're getting the pullback here, is this the highest levels we've seen in the 10-year? And the panelists, the three of them, they all said, yes, this is the highest levels. So we just go through to the US 10-year. Okay, wasn't quite the case, you know. So there often sort of elements that come through in pundits as well. So I just urge us to keep an eye on our pullback model, always seeing if the dips are compelling. We don't automatically buy the dips, by the way. We've got a signaling system, right? So if the pullbacks are turn out to be not compelling, the system sooner rather than later will let us know. All right, so that's just something that we want to consider. Let's take a look at some instruments going into the FOMC. So we're getting pretty close now. We are 36 hours away, roughly, right? Let's take a look at some core instruments here. So this is the Euro US dollar. So I've actually been stopped out here. So I was short, but I would be looking perhaps to get back in. I just want to see if the signals, these signals materialize. Okay, so we pull back through to, we're just taking a look at the Audi. So we've pulled back all the way to the R1, and this little candle here got me out. All right. I want to just see if that R1 candle, a big one. I want to see if that R1 level holds up, and if we do get some movement to the downside on the stochastic. So that's what is on the forefront of my sort of mind for today. I just want to see the crossovers of the the EMAs here. I want to see if the stochastic goes down, and I'll probably I'll re-enter the the position here. So I'm just taking a look at a comment here. Please explain compelling pullback. All right, so if we have a primary trend up, well, that's probably the direction we want to trade in. There are strategies where you would fade the primary trend. That's something that we don't usually do. I mean, I think that we have, I think we've spoken about it, and I think I've put on a few trades that have faded the trend, but by and large, we want to trade with the trend. So any pullbacks naturally become compelling, okay? Because it means that you're going to get a theoretically good entry. So you're getting in on the primary trend at a cheaper price. It becomes compelling. Of course, the idea here is there is no guarantee behind any trade. So you've got to use your risk management, and you've got to have stop losses. So a pullback in the dollar would be compelling. A pullback in the euro would be compelling. Why? Because their primary trends are dictate the situation. So you take a look here. Here's the primary trend. There's no doubt about it. It's down. Okay. Take a look at the US dollar. Okay. There's no doubt about it that is up. So any sort of opportunity to enter where the where I can get a better risk-adjusted entry becomes compelling. Does it make sense, Thomas? Okay. Does it make sense? Let me know. All right. Let me go to the screen. All right. Here's our baseline, just to give you an idea of how the instruments are looking. So this is a 4-hour chart. Okay, so on the 4-hour chart, so we've got the US dollar over here. It's testing sort of baseline support. Let's not talk about Bitcoin, just there's compliance issues here. DAX testing baseline resistance, S&P baseline resistance, oil baseline resistance. What are these baselines, by the way? These come off of Ichimoku's. So, and the way that the baseline tends to work is that there can be crosses of the baseline, but what really makes a baseline a nice instrument is the directional change in the baseline. That's an extra filter. So here, US dollar testing baseline support. Okay, euro baseline resistance. We just want to see what happens here with the directional changes. So you can see, look at all these charts. They're all right at the baseline. Can you see? So when they're all right at the baseline, these are all those compelling pullbacks that we're talking about. So we're at a time in the market where there is a lot of opportunity, depending on what your preference is, and of course depending how the primary trend looks. Just take a look how close we are. We've got 12 charts here. Every single one of them is at baseline. Every single one of them has pulled back. Take a look at US dollar Canada, the pullback. It's not one that we look at all that often. Let's just take a look at the loonie on the main layout, just to hammer this point home of a compelling pullback. Okay, so Okay, so I'm just going to US dollar Canada. Start off on the top. Start off on the week, right? Get the idea. Do we have a primary trend here? The way that we generally do that is with peak and trough analysis. Okay, so peak and trough analysis is telling you which way the trend's going, and these are definitions from Dow theory. They've stood the test of time for 100 years. What's the definition of an uptrend? Well, here it is: higher trough, followed by higher peak. There's your uptrend. Okay, take a look at the stochastic here. Now we're looking at momentum. So we've got an uptrend, but we've got momentum behind that uptrend now. Now, the longer that the stochastic stays in this 80, the more the greater the likelihood of price appreciation. It's momentum that's going to push this thing higher. You go now to the daily chart. Well, we now go down and we use our zone analysis. We're in the upper zone. We're in zone 1, and there's a few nuances here that are telling us this is looking very, very interesting. So what are the nuances? So besides zone 1, take a look at the direction of the Bollingers. Top Bollinger pointing up, bottom Bollinger that's just turned up. Okay, that's extremely positive, right? What about momentum here? Upper quintile. That's very, very positive. The longer we stay in that upper quintile, the greater the odds, the greater the probability, the shorter the odds of price appreciation. Go down now to the hour. This is where we're looking for that compelling pullback story. This is what we're talking about. Okay, this is where we actually put the theory into practice. Where's the pullback? Yeah, this is the pullback. Okay, now is it compelling? Sure, it's compelling. We can see the weekly is strong. We can see the daily is strong. Can we enter this? Well, depending on, of course, your preferences, right? You'll have your entry rules. Okay, according to our webinar entry rules, no, we can't enter this. We can't enter this now. Why can't we enter this? Because we've only got one of two signals. Okay, we've got only one of two signals. One. See, we've got the stochastic crossing over. We don't have the EMAs crossing over. The EMAs are trend following. So we've got trend following combined with momentum. Very powerful when they work together. Very powerful when they work together, because then we've got a trend following signal boosted by momentum. When they're not in sync with one another, we're not going to enter. Okay, so this is it's compelling, Thomas, but we can't just willy-nilly enter, right? This may actually pull back to S1. I think S1 here becomes even more compelling. Then we would wait for signal 2. Now, even if we get signal 2, so even if we get the EMAs, and if the stochastic still shows us that it's in bullish mode, is that going to guarantee that the US is going to appreciate against the loonie? And the answer to that is no. Okay, there's no guarantees here. So you have to use a stop loss and you have to use money management. However, once we do get some sort of signal signaling, it's a dual signal system. The real important part of this whole process is, does the stochastic make its way to 80? If it's long, if you're taking a short, stochastic must go to 20. Must. Okay. There's no other way for the swing to develop. It must develop with momentum. So you can see over here we had a pretty decent swing. Over here we had a pretty decent swing. Okay. So this area here, that's the swing. Okay, so if you were lucky enough to catch this? Well, you know, that's exactly what we're looking for here. For me, I haven't quite been as lucky as this, so I've been looking to short euro. So let's take the same discussion over through to the euro, and there's been no swing, nothing that I've been able to capitalize on. It's compelling. Euro is compelling, okay, because it's extremely weak on a primary trend basis. You can see that the trend is down. Lower peaks followed by lower troughs. There's a series of lower peaks followed by lower troughs. You can take a look at the momentum. It's just, this is not weak momentum. This is exceptionally strong momentum, but it's exceptionally strong momentum favoring the downside. Okay, go down to the daily chart here, and this is probably a symptom, not a symptom, probably sort of a cause of why I'm not getting the swings, is because it's sitting in neutral. It's been sitting in neutral for a week, and in fact, it's sort of challenging zone 1 now. But there was a rollover in momentum here, so I was hoping to get back into zone 3, because once we go into zone 3 and once we maintain in zone 3, okay, that's where trends develop. Okay, so you can see the euro, the daily, not quite syncing up as nicely with the weekly as US dollar loonie is, right? So there's an obvious difference between the two currency pairs there. And then of course, trying to catch the so I tried to catch this one actually, and there was quite a wide stop, and I was actually only stopped out here. But this has just been all over the place. It's just been moving sideways, and unfortunately, I'm stopped out. But I'll still try and get in here if I can. But now US dollar loonie is looking quite compelling. Okay, and also, what about oil? We've just spoken about oil price coming down. Okay, so that's quite an odd jump. We're talking about US dollar to the Canadian. We're talking about euro to the US dollar. What's oil got to do with our discussion? Well, it turns out that the loonie has a very strong correlation. Okay, very strong correlation with oil. Okay, very strong correlation with oil. So oil is coming down. Okay, oil's been coming down. So if oil's coming down, it's actually a headwind for loonie. It's actually a headwind for the loonie. Loonie, just to be clear, is the Canadian dollar. The reason it's called the loonie is because there's a picture of the loon bird on it, so that's why it's called the loonie, right? So US dollar Canadian is actually quite an interesting play now. What I think we can take a look at is let's take a look at the difference in spreads. Something that we haven't looked at recently. It's probably worth, whilst we're on this discussion, let's do it. Let's take a look at the relative spreads. Okay, so what we'll do is the Bank of Canada has been very, very hawkish. So let's take a look at the 2 years first. So we'll go the US 2-year minus the Canadian 2-year. What do we get here? Well, you can see that the hawkishness of the Bank of Canada very much almost up to the task in terms of the comparison with the hawkishness and the aggressiveness of the Fed. So the 2 years have been moving fairly similarly. Let's just take a look at these with the US dollar loonie as well. Okay. All right. So there's certainly an uptrend here because we've got that higher trough, higher peak. But the fact that the Bank of Canada has kept sort of in line with the aggressiveness of the Fed, perhaps reflected in the gradient of the US dollar loonies uptrend. It's very flat, isn't it? So this is going to be very interesting in terms of measuring gradient now. See the gradient starting to steepen up. I wonder if that's going to be reflected in the aggressiveness between the two banks. And you can see that there was an inkling of that, but that's been faded. Let's take a look at this in terms of the 10 years. All right. So here the US has certainly now started to dominate from about July. Okay, so from about July, and the spread on the 10-year. Let me just fix this up here. The spread on the 10-year certainly now trending up in favor of the US 10-year over the Canadian 10-year, and that's interesting. That's interesting. I'll tell you why it's interesting, is because there is an inversion on the US 210s. Let's take a look and see if there's an inversion with the Canadian 210s. And then we'll make sort of a final sort of inference in terms of the relative economics. I'm actually going crazy. Sorry, got it the wrong way around. Yeah, so we've got an inversion, yeah, we've got a strong inversion on the Canadian. So the chances of recession in Canada must also be considered, right? All right, so we've got a very deep inversion here. So this is an interesting analysis we've just done. And by the way, you know, I haven't done this outside of this webinar. This is something that we're doing together. To me, it actually makes a very, very strong case to add the US dollar loonie to our watch list and see if there is opportunity here, given the fact that we've got a very deep inversion in Canada. We've also got a weakening energy price, which is a strong export of Canada, and we've actually got the 10 years outperforming. And the 10 years, when I say outperforming the US, outperforming the Canadian, and that's not a great sign because the US 10 years aren't doing all that much because there's that inversion on the US side of things as well. So all of a sudden, we've got quite a strong candidate here to add to the watch list. And I think this is something that's all come about from Thomas's question. So thank you very much, Thomas. We will, I think, start monitoring this. Having said all of that, I think we are very interesting 36 hours. Just be aware of the heightened risk associated. It very much depends on the communication out of the FOMC statement, and then we've got the press conference later. And then look at the dot plots. The dot plots, the last dot plots we have were from June, and they're completely out of date. The terminal rate, which is the terminal rate, let me explain what that is. The terminal rate is the turning point of interest rates. So the turning point is 4.75%. So the market at the moment expects 4.75 before we get any sort of cuts. Well, the last dot plots their terminal rate was under 4. I think it was around about 3.8, maybe 3.85. I can't quite remember. So it's very out of date. So we want to just take a look at what the dot plots are signaling as well. Any questions, guys? Any questions at all? Please go ahead and let me know. Just remember, we've got on Thursday we're starting our 5-week day trading course. We've had a very good response. I'm very excited about it. If you need to get a link, email me. I did receive your email, Joachim. I need to just see if there's anything, but the truth of the matter is EU's very much, it's built into the registration IT infrastructure to so EU, and it's compliance. I can't present to EU clients, so so let's just I'll get back to you on that. But just email me again. If you are waiting for an email from me, I've probably sent it. Just I'm fairly certain I've sent it, because everything in my outbox, I've ticked off everything I've had to do. So then if you haven't received this, probably in your spam folder. So just check there. If it's not in your spam folder, just email me again, go, Russ, I've looked in my spam folder, it's not there. And then I'll find an alternative way of getting the link to you. But I can't reply to any sort of second email saying, but I haven't received it, because my reply is going to go straight back into your spam folder. You'll never get the reply. So you'll think, well, geez, this guy's rude, he hasn't replied to me. But just check your spam folder. Thomas, I think we'll wrap up here. The question is, can we explain the widening, narrowing of the Bollingers? Yeah, let's keep that for tomorrow. Just remind me tomorrow if I forget. So we'll do Bollinger theory tomorrow. All right, guys. No other questions. So I think we can wrap up here. Have a good day and a good evening ahead, and then we shall chat tomorrow morning. Tomorrow morning, we've got two. Remember, we've got the morning market review, and then we'll do the crypto minute after that. Thanks very much, guys.